right. Hello, everybody. Welcome back to another potentially exciting, potentially depressing episode of The Rational Investor. We're officially in Meltdown, Goblin Town mode here. We may, if we go further, go somewhere called the Shadowlands. I don't know if anybody's heard of that, but that's where you go after Goblin Town. Currently, we're in Goblin Town. There's a lot of chaos. We're going to go through it today. So originally, I think there's a couple things here that hindsight's always 20/20, but there's a couple things here I think that are fairly obvious without even going to any indicators. The first thing is that we had this huge uptrending channel caused by quantitative easing created by the Fed. The Fed said, we're not doing quantitative easing anymore. There's inflation everywhere. It's not transitory. We're going to raise interest rates. Okay, so if lowering interest rates started this whole thing, then shouldn't theoretically raising interest rates stop it? So the other thing is the glaring obvious breakdown in structure here, right? We had this huge uptrend and breakdown, and then we had an M top with divergence, massive divergence here and here. And here's your breakdown, right? So here it is right here. Like that, right? There's your breakdown. And then here's your retest. And here's the retest right here of this trend line. Let's go. Okay, so where do we go from here? So you can see we're going to go to full screen again. I had this support zone, or we just hit this support zone right here, right? This is the lower end of that support zone. We're at 3,900 right now. And we've got a major support level right here. I'm gonna actually delete this. I'm gonna delete this, and we're gonna do a giant fib together. I think I already drew it, but we're gonna look at it really quick. Here's the top. Here's the bottom, and I want to reverse it. So 38.22 is right here. 38,222. That's your 38.2 of the entire COVID range. That's going to be a big level. So we want to keep our eye out for that. Another thing that we need to watch out for is if I go to lower time frames, let's go to 8 hour really quick, and then I'll go back up. I know I like to go in order. We've got this downtrending channel right here. And it makes sense that we're hitting this level and we're bouncing. We should bounce and go up to this midpoint, 4,000 BFRN. I don't see why we can't hit that level. That looks like a level we could hit. We could even go up to here. That's kind of the zone. But I think any bounces we get, they should be shorted. Going with the whole, as long as the Fed is tightening, as long as we're in this inflationary environment, you should, go with bearish bias. So US dollar, right? That's huge. We got to talk about the elephant in the room, right? I talk about this every week. Let's look at this weekly chart. Look at this, right? This was this multi-year trend line we had right here. And we have actually what's called a C fork. Brian, you remember I told you about the C fork. We have a C fork breakout. So here is let's go to a monthly. This is what's going to be causing a lot of the pain, okay? Here was your one downtrend line. Here's your other secondary downtrend line. So this is a C fork, first one, second one. And on the breakout of the second one, that's when you take off. It's basically a W, and then the second line is the confirmation of the W. And that's what we have. So this confirmed on a monthly chart. On a weekly, it's very obvious to see. Super confirmation on a daily. Obvious, clear, retest of the trend line, breakout higher. And now we're just taking off. Everything valued in dollars is going to get destroyed. And it's not going to, this kind of monthly breakout, this isn't going to stop. This is why I say you actually want to be in fiat right now, okay? Don't stay off fiat right now. Get into fiat. Okay, we might get a small reversal. You might get a nice bounce. Use that opportunity to get into dollars. Okay, you want dollars, not some other currency. If you can, even if you're in another current country, try to get into dollars. Because this is where we're going, potentially. I'm going to be conservative here.
Fuck him up. Fuck him up. Excuse me.
Was that Brian or someone else? Who was that? Yeah, So right here, 143, fucking bottom. That's our level. We'll probably stop at 2.618 right here for 120. We're almost at the 1.382 level. These levels are very well respected. I could also draw it from here. You know, sometimes I try to be more conservative and line up with the most levels, and I found it works better rather than going for the highest one. But you know, we can watch and see. Sometimes like this works better. I'm going to prefer to be conservative, and we'll use these levels. You can see how 2.618 lines up perfectly kind of with this level. Let's see if I raise it. Where do we? No, see, we're way above it now. I would prefer. I think it's better when we line up with these strategic levels. And this is kind of what's going to happen on the way up. And eventually we will go to this 143. And there's no way the US dollar can go up 40% and everything else can stay the same. It's going to, you know, everything's going to dump at least another 40% before this, you know, before this whole thing is over. I don't see any other way.
Cycle. 2022, 2023 years.
It's not if you're in US dollars, right? Everything is basically going on sale. It's a sale. You know, we just have to rotate our capital.
1980 fear cycle peak. Excuse me. I'm sorry.
He's so funny. He's so funny when you're here.
This is everything that I teach you guys. This is everything.
I know. This is you.
So
So it's okay that you're jumping in because you're excited. What?
Brian is always early. I've been barking about this now for a couple
All right.
years.
So Brian, since your prediction and what you teach is happening, how are you playing this? Are you in cash and you shorting it?
I'm sitting on I have a little bit of Canadian dollars just to make sure I can pay my rent and pay my bills. Everything else is sitting in big old fat US dollars.
Very nice. And what about shorting?
You know me. I'd just rather just sit in cash, wait for the dust to settle, and then we just start the whole damn thing all over again.